Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A sort of follow-on lower on Friday to the previous session's combined key reversal down and bearish engulfing pattern. I say sort of because though we saw a new low, not seen since July 2020, the actual pattern on the day ended up as a possible hammer pattern, usually seen as a bullish pattern. Additionally, if it does end up as a bull hammer, then it will also be a fourth countering move. That's quite a sign of a market that is indecisive on an intraday basis. Below, we now have the 50% Fibonacci line of the March 2020 to January 2021 move at 114.92. Then target X in the 114.5 area. That's the potential target for the recent July to September bearish cat's ears pattern. Overall, we are still within the follow-on lower from this recent cat's ears pattern formed over July to September, plus more recently the weekly key reversal down from 2 weeks ago. Now, in the cat's ears pattern, the neckline above is made up from the combination of 38.2% Fibonacci line of the March 2020 to January 2021 move at 116.94 and the neckline currently 116.81 of the August to September 2020 head and shoulders top, plus now the declining short medium moving average currently 116.80. All of this, as I've said for many weeks now, comes in the shadow of September's monthly key reversal down. Looking at the even bigger picture, we are still nicely moving down in between the upper time, currently 117.23, and the middle time, currently at 113.52 of the January to May bearish Andrews pitchfork. And this pitchfork has run the bearish picture for the whole of 2021 so far. Now, so far today, the market is holding for the moment just under the limited resistance from the 2019 high at 115.70. Cable, aka sterling against the US dollar. A lower but still indecisive doji cross on Friday, making a new low not seen since late September, but showing signs of not wishing necessarily to be down here in the first place. This is a further move lower and away from the overhead broken lower trend line, currently at 136.78 of the July to date sideways triangle. Prices end up closing on in between the overhead September 2019 high at 135.16 and the September 2020 high below at 134.83. Despite this apparent indecision, we now seem to have the targets lower down for the recent July to date broken sideways triangle back in the frame. The market had already achieved the initial target X below in the 134.90 area, but the secondary target in the 132.65 area is still there and, as I've often stated, harder to reach. So I'm thinking that perhaps just reaching the original target X may have been enough. We'll see. I was also recently thinking of retiring target X1, but I reckon I'll keep it on for a bit longer. A couple of final points. I've droned on interminably about the longer term whole of the 2021 double top pattern, Adam and Eve type. I thought it was becoming more obscure as time moved on and prices didn't. However, the late September to early October move down and last week's action as well revitalized this idea. Enough that I'd placed some potential targets for the pattern below. Initial target X2 in the 133.60 area and a secondary target X3 in the 131.10 area. Finally, I have my first bearish Andrews pitchfork here for quite some time. It is for the early September to late October action. Currently the market is in between the upper time overhead, currently 136.98, and the middle time below, currently 133.54. So far today, possible if small bearish engulfing patterns today, not the hardest of patterns to make after a doji cross. This may still be a likely follow-on lower to last week's action. Below, next is the September low support at 134.10. Euro sterling. A second bullish white soldier on Friday and a suitable follow-on higher to the previous session's immediate countering key reversal up and bullish engulfing pattern. It was also the second consecutive close up over both the important flatlining short medium moving average, currently 85.26, and the flatlining medium moving average, currently 85.35. It was also the first time the market pierced the declining long moving average, currently 85.35. Interesting that. That should actually be 85.81, that last one, but we'll get that changed. Though the prices failed to close over either of them. over the long moving average. This piercing overhead now brings back into focus the September highs in the 86.13 area and the April 2020 low at 86.69. Finally, I'd like to say a few words on the reincarnated idea of the June to date expanding broadening wedge pattern. I've been minded to look at the shallower lower trend line based from early August as the new trend line. Currently that's at 83.94 for this period. I'm seriously considering relabeling the chart in the next little while. So far today, further attempt higher over the declining long moving average, but not as high as Friday's move higher as yet, and coming back off again. Beyond that, well, we have the September high at 86.13 and the April 2020 low at 86.69. US dollar against the Indian rupee. An immediate countering key reversal down and bearish engulfing pattern on Friday, if only just on the latter. It was the first clear close below the quartet of supports that had held up the market late last week. They are the broken downtrend and trendline combination of the April 2020 to date move, currently at 74.34, plus the slowly rising medium moving average, currently 74.29, and the flatlining short medium moving average, currently 74.22. Finally, the 50% Fibonacci line of the February to April move at 74.26 is included in there as well. This was a significant close below all these supports, and that are now turning into resistances. Going back to the previously mentioned broken downtrend and trendline combination of the April 2020 to date move, currently at 74.34, this trendline makes up the large April 2020 to date sideways triangle. Now this triangle, broken on the top side, originally gave an initial target X in the 76.36 area and a secondary target in the 77.79 area. These were based on two big assumptions. Firstly, that the break higher up and away from the recent sideways triangle was not a false break. Secondly, that the hesitation was seen since mid-October may be a type of bull flag or bullish halfway hesitation type action. Now these are big assumptions, and it very much looks as if these assumptions are now false. Watch this space on this, as below we now have the little until the 50% Fibonacci line for 2021 at 73.84. And then also the rising nearby long moving average, currently 73.82. So far today, the market moved back up over the 50% Fibonacci line at 74.26 before turning back down. I suspect this failed move up was an ammunition gathering exercise for a fresh attempt lower, and we are currently seeing the results of that exercise as I speak. US dollar against the Brazilian real. A reactionary bearish black crow on Friday, as the previous session's bullish harami proved to be just a bit of a hitch in the way to the market heading lower. The market punched down and closed way below the lower bull channel line of the nascent early September to date bull channel, currently 560.46 to 589.98. This bull channel had seemingly recently taken over the running of the market moving higher at a more acute angle. However, it now seems that the influence of the bull channel is truly over. I'll keep it on for one more day or so, just in case. But I will now concentrate on the late July, late August bullish shift pitchfork, which had done a lot to get the market up where we are now. Now this more shallower bullish angle of attack this pitchfork affords seems more reasonable right now. We are currently in between the upper tine, that's currently at 566.84, and the lower tine, currently 547.51. The fall on Friday also pierced the lesser Fibonacci line at 552.91 and finally halted at another lesser Fibonacci line at 550.12 before the market closed above both once again. One final point. Last week I highlighted the chance of a possible weekly key reversal up. Well, or not even a weekly key reversal, just a weekly key reversal, not even up. Well, this weekly key reversal down actually happened. We had a weekly key reversal down last week with all the implications that brings. US dollar against the Mexican peso. A bearish long black Mariposa on Friday, though interestingly not a bearish engulfing pattern after the previous session's indecisive spinning top. That's an unusual one. It was nevertheless a continuation of the move down following last Wednesday's huge key reversal down, daily key reversal down. Prices dropped down through a fairly clear area until finally slowing and halting ahead of the mess of moving averages below, consisting of the slowly rising short medium moving average, currently 20.2688, the flatlining long moving average, currently 20.1854, and the medium moving average, currently 20.1354. Additionally, below all these, we still have the upper trend line of the recent broken descending triangle, and that's currently at 20.1019. Meanwhile, overhead prices have departed away from the resistance from the 50% Fibonacci line for the whole of 2021 move at 20.5849. It still all leaves a question open on whether the September to date action is a bullish halfway hesitation or a topping action. It also leaves open, though perhaps a seeming diminishing chance of success, of achieving target X1 in the 21.23.5 area. This is a secondary topside target for the June to date descending triangle, one usually hard to reach. We'd already breached the primary target X in the 20.89.20 area. This whole action last week in turning back down should be seen in the shadow of the weekly key reversal up made only 2 weeks ago. So far today, a reactionary move higher away from the mess of moving average below, though limited in its ascent. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.